Hi, this is the Euro JPY pair, and today it's Monday, 10th of June 2013, and the time is 9:48 GMT. We are looking at the daily chart of the pair, and we can see here that there was a huge hammer candlestick. Let me magnify the chart. So here is this candlestick. You see it has a very small body, very small wick, and a tail which is more than 10 times longer, bigger than the body. It says, it cries reversal. And because when a hammer candlestick is being seen at the lower end of a move, it is a bullish reversal candlestick, very strong candlestick. Let me go back to the previous view. I'm using Ichimoku Kinko Hyo system, and I have superimposed Bollinger Bands, the three colored lines, which are alligator, Bill Williams alligator, and the fractals, which are these purple arrows, also Bill Williams indicator. And these green lines, this histogram in the footer of the chart, this is the volumes, the transactions volumes, and it will it helps us see, especially if we use it like here on the H4 chart, we can see that the reversal is true, is strong, and the price has resumed its uptrend. The pair has resumed its uptrend, and we see that now the price is actually above the Kumo. Kumo is bullish. It has a slope upwards. It was going to turn downwards and give us a bearish Kumo, but things changed after this reversal, so it's resuming its uptrend. The correction is over. Let's see the weekly chart. Very sharp edge pointing upwards on the weekly chart. You see how sharp it is. And although the leading alligator has started being curved downwards, it's corrected and it's showing straight up right now. Even the upper Bollinger Band, it had started closing inwards, but now it's opening upwards, saying and showing that there is room, there must be room for more price action upwards. And since Bollinger Bands contain price action, they are like rubber bands. They have a huge elasticity, which is adjusted to the volatility of the market. On the monthly chart, we see that the price is in the process of attempting a bullish Kumo breakout. If that happens, that will be huge. The reversal started at the beginning of a few months ago. Let's say not a few months ago, almost a year ago, and we see that we are getting closer. You see the Chiku span is going up, straight up, above past price action, but it's still below the Kumo. But once this bullish breakout happens, we will see tremendous bullish move for the pair. The pair will literally fly. We see the high volume here of transactions. It signifies also a very strong bullish reversal, because we had this bearish move for since 2006 we had this bearish move. Now 1 year ago the bullish reversal has started. Okay, we see this picture on the monthly chart. We saw the weekly chart 100% bullish, the daily chart not 100% bullish yet, because we expect The Chiku span, this line, it's green and it's a bit confused with the green line of the alligator. We expect this line to go straight up here above pasteurized action here in the open space, and once we see it, we can say that yes, we have 100% bullish picture of the daily chart, and we also expect the leading edge of the Kumo to be sharply pointing upwards to make a formation pointing upwards. Okay, it's horizontal right now. H4 chart, flat top, belly down Kumo, which is bearish, but this formation, belly down formation, flat top and belly down, is a bullish formation. Once it is completed, we will see here a new bullish Kumo being born, sloping strongly upwards and having a very sharp edge pointing upwards. Okay, so that will be a signal for us to trigger our long entry. You can enter now, of course. You can enter now because you see very strong move. Let's go to the H1 chart. Very strong bullish breakout. You see the leading Kumo has a sharp edge pointing upwards. You see how aggressively the price goes up on the H1 chart. M30 chart, very sharp leading Kumo edge, very sharp pointing upwards. You can literally cut your finger on it. Always keep that picture in your mind. If the leading Kumo has not as sharp edge pointing upwards that you could possibly cut your finger in it, don't enter long, wait, okay? Here we have 100% bullish environment. M15, the same leading edge is sharp pointing upwards, you can cut your finger on it. Chiku span is going straight up. You see the price up, the leading alligator crazily up. M5, sharp leading edge of the Kumo. M1, price goes up. Okay, so yes, you can enter now. You can enter now. You don't have to wait for H4 because it has to go through a very small distance, and possibilities are it will make it. Okay, so don't wait for H4. Go right now. Enter. Use a small time frame M1 to find your entry point. Place your stop using M5. You can put your stop here below this fractal here, or from M15 below this fractal. M30, you can put it below the upper border of the Kumo here where the breakout happened. Depending every time, you must be sure that this distance between your entry and your stop loss is less than 3% of your account equity and is impossible, highly impossible to be hit. Okay, that's what we are looking for. If you can afford putting your stop here below this fractal, that would be great, but we are on the M30 chart. I don't know if this distance is okay for you. On the daily chart, an ideal place to put your stop would be here below this lower border of this Kumo. But if this distance is huge, you can put your stop a few pips below this fractal here, although the possibility of getting hit is increased. But you know better which is the tolerance of your accounts. You get my point. We can't say where to place our stop from the H4 chart. Ideally, we should place it here below this, the leading Kumo. You should evaluate the ideal placement of your stop loss using the H1 chart, and you can, if you enter it by using the H1 chart, if you put it, let's say, below the Kumo here or below this fractal, then you should trail it up and put it, as price goes up, it makes higher highs and higher lows. The new higher low will be somewhere here. It will go up and will come down, and when the new higher low is formed, and it is validated by the consequent price action, when price will go up after that, and you're sure that it goes up, then yes, you can place your stop there. You can trail it from here there, but not before price goes up and is getting ready to make a new correction. Okay, so that's the whole point. The pair is going to give nice profits, so enjoy the ride, and happy pips, and thanks for watching.